Hello, this is the Chart Profit video, approaching 2.5 hours into the trading day on Friday 17th of November. This from the pre-open today. We're looking at the E-mini S&P 3-month controlling price has settled back at 2573.50 here, and on Thursday we saw support at that level early in the session and a rally back, the value area being printed above that level. This is strong price location. Also noted that we've seen an improvement back above 50% level for all three of the indices regarding their breadth numbers, which is an improvement. Meant that on the pulse chart here, New York daily breadth indicator has just gone back to neutral. It dipped for a day here down into negative territory, that red line. That system running on the bottom two indicators here on the daily breadth indications. And the bottom indicator, there was a very slight dip below 50% for the percentage of stocks greater than their 50-day moving average in my New York list. But it seems to have just rallied back a little. And we return to this grey for neutral on the breadth. Looking at the price oscillator in the bottom, the price momentum remains above zero, so price trend still up. But there is quite a divergence with the momentum itself. We're seeing a lower high here. Obviously with price we're seeing a higher high from that point, and we still see momentum heading down. It has a strong tendency to return to the zero line once it's done that. Witness here and here. So we're losing momentum, but the S&P back up around the highs as of yesterday. This dip being bought once again. So 2573.50, our first level support now for the E-mini. If we look at that on the current half-hourly chart, 30-minute chart, here's the level. There's the support at yesterday's open. Currently this session holding up quite well. And as you saw in the pre-open there, we haven't seen significant selling, which would be a red bar, as here. We haven't seen that for this entire run, so that's 63 days without significant selling being marked. Looking at the sentiment, this is my version of the RIDEX assets ratio, currently just above 15. Here, as we know previously, very recently, the ratio printed above 18 for the first time in my database. So an extreme at this point, usually a warning for the market. Came off a bit and rallied back a bit, but that is the significant event on this chart. Looking at a weekly chart here of the bull fund assets in isolation going back to 2007, you can see the extreme level reached in the bull fund assets, and late October an extreme low reached in the bear fund assets. So the retail traders there in the RIDEX data extremely bullish, remembering that these are contrarian indicators. We now look at the public poll from AAII. It's quite a dramatic change there. We've just seen a change in the net. That's the bulls minus the bears. That fell to a negative 5.9 down here from a positive 22 up here. That's the largest 1-week fall in the net position since April 2013. So just over 1 week, a huge change in opinion from very bullish to mildly bearish. Bulls percentage fell from 45.1 previous week to 29.3% this week, and bears jumped to 35.2% this week from 23.1. In the short term, that may add a little fuel to the market. In the Investors Intelligence poll, the newsletter writers, the bulls percentage was slightly lower this week at 63.5, remembering that the previous week it peaked at 64.4. Bears percent this week is higher at 15.4%. That's up from 14.4, and the net, that's bulls minus bears, this week at 48.1, just down a little from the previous week's 50, which was the highest since 1987. And if we look at the ratio of bulls divided by bears at 4.1, that's actually down from previous week's 4.5. So previous week there was 4.5 times the bulls and the bears, and that was also the highest since 1987. So at this point, 1 week ago, this poll reached practically a historic extreme in bullish sentiment. Remembering again, these are contrarian indicators. Lots of bulls here currently. Looking at the current spider chart here, we have support at the 6-week at 255.19 here. All of this price action taking place above that level, which indicates strength. A value area printed entirely below that level would be the first sign of weakness. Russell 2000 small cap ETF, IWM recently over the last couple of months underperforming the large caps, getting a little oversold at this point and has bounced back at the end of this week. UK's FTSE 100 index ends this week below the 18-month at 74.13, so finishing near the lows of the week and below this support, putting this index in a weak price location here. Don't have any currently local support level for the German DAX. Had a very strong run since mid-September when it printed above its 8-month, and it's currently well down from that level over the last couple of weeks. So just from the last few charts that we've looked at, still seems to be the case that US large caps relatively outperforming most of the other indices. Talked about this chart last week at length. This is the T-bond ETF, TLT, and we just look at price action from this low in March. We saw the high here a couple of months ago, and then we saw a retracement down to the halfway point off the low, kind of double bottom there, and chart has worked its way back slowly but surely into a strong position. We've just seen late last week, early this week, a test of the 10-month at 124.40, and that has held. This is not a weak looking chart, and if we just look at the minor halfway point from this high to this low on the breakout there, dotted line representing the halfway point, that minor halfway, and we're finishing the week hopefully closing above that level. This is interesting. This is USO, the oil fund ETF. Look at data here on a 30-minute chart back to late 2015. We're looking at the price distribution across that period. We know the controlling price here, that's at 10.14, that price there, an important level for this chart. But if we look at the dotted line here, that's the value area high. You can see it back over here of the price distribution back to the start of the chart here. We've just tested that. We've come off that point a little bit, as we know we often do. There's a price in here just below 11.50, which potentially could attract time, and potentially we could see this controlling price migrate higher, which would be extremely interesting. In terms of the distribution from this point, the value area high, down to the controlling price, these are, or if you like, this is selling pressure. We have buying pressure here. Should that controlling price migrate higher, it would change that dynamic completely. We'd likely see a lot more buying pressure. So it's just a potential situation that could happen if we see a little more time, printed just here below 11.50. So I've now updated the daily chart here. So we'd be looking for time in here somewhere. Potentially very bullish. GLD, the gold ETF, we know it found support here at the major 119.84. It's been consolidating above that level since, and we're attempting push higher again. Potentially this is a strong looking chart. Been saying that unless we see price action here in the dollar index, or time being spent above this level, 95.50, then we can't assume that there's been a major turn in the dollar index. But price above 95.50 would be bullish, and we haven't seen that. In fact, at the end of this week, we're down here testing the 8-month at 93.46. Price below that point would be weaker and suggest a retest of the September low. And if we break below that point, we'd be looking at the halfway point of this low from a major low or an important low. We always look for the first retracement from the first high back to that halfway point. If it's a strong chart, it will usually hold that level and bounce. So price back below here, below 93, would definitely suggest a retest of this September low. I'm not convinced yet that this is a major turn. And if we look here at the Euro FX chart, we can see that currently, well, this week we've had a strong rally earlier in the week back above this level, which is the 1 year, 117.55, and at the end of this week currently we're holding that level. In the minor time frame, this halfway point here, this dashed line from the recent high to the recent low, price above there would suggest a new high for this move. So we'll watch that level in the pre-open on the Euro FX chart and the sort of mirrored level on the dollar index. The pound dollar chart here, we've been following the halfway point from the Brexit high to this low. Resistance, clear resistance there. Currently I've been looking for a higher low, a very clear higher low. That would have done it. We didn't see that. Instead we're seeing price and uncertainty printing time around in the majority of the time below that level. A higher low would have me thinking like this, would have me thinking that we're going higher. Not sure at the moment. In the longer term though, as long as we hold this 9 months at 129.95, the chart's in a strong long-term position. Finally, the dollar yen, two important levels, most importantly the 2 year here at 111.30. I've been saying that all this price action, I think for the last 8 weeks, has been above that point, putting the chart in a stronger position. You would expect, if this was a really strong chart, that once this halfway point from this high had been exceeded, we would have held here and then moved higher. But in fact, at the end of this week, we've seen price back underneath that level quite sharply. So we're looking here to this 2 year controlling price for support, but price back underneath that level would indicate further weakness. So those 4 charts together there indicating that any assumption the dollar index generally is strong from here is possibly a little premature. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.